The Central Bank of Nigeria, of course, for over the last 4 years, been at the forefront of President Buhari's economic performance. Of course, not with the 41 items, of course, the recession and how we were able to wiggle our way out of that. And of course, again, the FX market. So it was no surprise yesterday that President Buhari's re-election, the central bank is kicking that off with the FX ban on imported textile and other clothing materials, giving way for the local industry, including those in cotton growing business, to get on the game. This is one big story, the first after the President Buhari's re-election coming through from Godwin Emefiele's central bank. But let's have a bit of this and other broader conversation with Jolomi Odonghanro, who is an associate and team lead for fixed income at Afrinvest. Is a member of the team. One of the big stories around the textile industry, if you're in the business or in the market, you know that the Nigerian Stock Exchange had some textile companies that were listed there years ago, but they've since gone under. Talking about Nigeria Textile Mills PLC, based in Ikeja, Lagos, Aba Textiles and Asaba Textiles, those companies were long gone. So let's have this macro and micro policy outlook on President Buhari's 4x4 economy. Jolomi, good morning. It's good to have you on the program. Thanks for coming through.
Morning, Bosin. Thanks.
Thank you. Let's get the ground running. The textile policy. This is an economic policy, even though it's coming in from the central bank, because the focus is to allow local textile producers, the cotton growers and others to begin to raise up our industrial production. How does this policy, which came out less than 24 hours ago, how does it hit you?
For us, it comes back down to demand and production levels. Right now, we don't have anywhere near enough production to meet the demand in the market. So what you're going to have is that we still have to import, and the higher prices are going to be passed on to the consumer anyway. So, I mean, yes, you can see the intuition behind, or the reasoning behind why the policy was brought forward, but then it comes back down to one of the issues that we have with the low growth that we have in the country, and what we really need to take Nigeria to the next level, back to our long-term growth rate, which is around 7.6%. What we need is to boost competitiveness, to be honest, and these sort of policies breed inefficiencies in the system. So yes, you might have local producers build up a capacity towards a level where they might meet a good amount of the local demand, but the inefficiencies that these sort of policies breeds in the system makes our industries less competitive.
So what's your take here? We shouldn't go this route. So what do you suggest?
At the end of the day, our view is that to really boost the economy and to get us back on the path of strong growth, you need to remove tariff and non-tariff barriers to trade and investment. And in our view, allowing the sector to organically grow and build up capacity such that it can meet up to demand and compete with imported products, that is the way to go. So it's about investment in the sector, not so much in, setting up barriers that at the end of the day breed inefficiencies and make our industries less competitive.
If you're trying to grow your domestic, from a macroeconomic point of view, if you're trying to grow your domestic industries, how does that make them less competitive? How do they become less competitive?
When it comes back to less competitive from looking at it in relation to the imported products that are coming in now, they are going to come in at a higher cost. So obviously the producers are more comfortable, to take things slowly and not exactly build to the capacity such that they can actually get to a point where they are exporting. That's where it comes back to competitiveness. Because when you have these sort of barriers in place, what you find is that the capacity of the local producers is never fully maximized because of that security they have. Now, I'm not saying that there's no incentive. The intuition behind this is completely negative. What I'm trying to say is that our industries need to be more competitive, and these sort of these tariff barriers and non-tariff barriers make us less competitive than we should be.
Okay, if you look at two sectors or two products, in a manner of speaking, to this, look at the locally produced juice industry under the Obasanjo's administration. There were barriers which the Obasanjo's administration way back then introduced. Today, we are self-sufficient in domestic juice production. In fact, we have some foreign companies coming in and buying up some of those early movers, early producers, and now they're coming into the market. Now we have self-sufficiency in juice production. We have the same policy on cement, which makes us self-sufficient today in cement production.
Yeah, but like I said, no one is saying that these policies can't help. But what we come back down to is that we need to be more competitive, and that having such barriers makes us less competitive. This isn't the first time. The textile industry, like you mentioned prior to the start of this, was booming at a point. And in the late 80s, we did have some barriers that allowed them to boom. Yes, but they weren't able to sustain these performances because of those barriers. So where you have some sectors like you just mentioned with the cement, where you have big investors come into the market and obviously meet up the demand so that the cement industry can actually start to export and move to other countries. You also have to have, in the textile industry, there has to be a certain amount of investment or incentives to bring in investments into the sector that are not exactly tariff related.
Okay, so what's your take? President Buhari's got in his 4x4 another 4 years, so that's a total of 8. In terms of economic governance moving forward, what's your take on what should be the broad macro and microeconomic policy focus?
For us, we've put out our banking sector report, put out an economic agenda for a new government, and we basically reiterate our views in that report. Where we are right now is we're at the low phase of growth, and we believe that there are certain policy changes or certain policy actions that can return Nigeria to the long-term growth rate that we saw in years past. And so we're looking at oil and gas sector reform. I mean, the PIB has been on the table for about 11 years now, with little to no movement, and with product sharing contracts coming due. We believe that it's time to revisit that so that the fiscal terms are more clear to investors. So so it drives investment, because investments have pretty much been stagnant in that sector, in that industry segment of the sector. The regulation of the downstream oil and gas segment is also important, because if you look at what we're paying out on subsidy and how that amount could be used to drive growth in other areas, it's something to look at. Power sector reform. If you look at the entire value chain, there's basically deficiencies all across the value chain there. And given the importance to national production and national growth, power sector reform has to be a priority. Going further, infrastructural development is something that is very important. We spent about 1.4 trillion naira on infrastructure investments in the previous year, and this year is looking like it's going to be around the same level, whereas we need about 9 trillion naira in investments per annum to really bridge the deficit gap. And you have an economy, you have a population that continues to grow without the requisite investment in infrastructure to meet up to their needs in the future. So infrastructure is actually really important to drive growth. So we are looking at the government looking at how to make PPP, or to bring PPPs more on board, private-public partnerships more on board, because at the end of the day, we're very weak in that regard. This may be down to looking at the legal framework to make investors more comfortable that contracts will be honored. You can look at that. Further down the line, security issues must be tackled. Issues around human development, education, and healthcare. I mean, our healthcare system is quite poor. You need a healthy workforce to drive productivity in the future, and beyond that covers human development. So basically, this is a broad high-level view of the things that we believe the government should be looking at. Now, none of these things are going to get short-term, very short-term wins on. These things take deliberate action over a prolonged period, and it has to start from somewhere. I mean, it's just speaking about the infrastructure spending that we need to do over the years, just to even bridge the gap that we have now. You realize that if you put a framework in place, then the spending will catch up to where it needs to be over time. You're not going to bridge a significant amount of the gap in a year's time. So, I mean, these are things that we believe that the government should focus on, and those are things that will drive us to the next phase. So, in general, yes, that's it for us.
Okay, so what more would you like to see? Is it more of policies or more of speed?
Like I say, you can have one without the other. But if it takes time to put the correct policies in place that would eventually drive us to where we need to be, then that has to take precedence over speed. Even though I'm not saying that we should take forever in like institutional cabinet again, but there needs to be deliberate action that will have long-term gains. If you're going to focus on PPPs, for instance, like I mentioned with the legal framework, and you decide that you want to bring that to the fore, it's going to take you a while to actually come up with the policy framework that assures investors that they can do these projects with government and have their contracts honored. If that's what it takes, you find that it might take the next 10, 20, 30 years for us to actually bridge the infrastructure gap, but spending will accelerate to meet that. It may not be in the tenure of this government, but the right policy actions is what is needed for us to really drive economic growth.
Don't you think, Jolomi, that we spend so much time crafting enabling environment, each and every administration, that we end up doing little in terms of implementation? We have a whole apparatchik of government in place, ministers, the MDAs and whatever. So why do you think it takes so long to birth good policy ideas and hit the ground, hit the button, implement them?
You're very right that when it comes to implementation, we've been poor. I mean, over the years, it's not down to this government. It's been happening for years. I mean, most of what I've spoken about today that we're looking at, these things are not new. You are right that it requires a certain amount of speed, but again, deliberate action is actually really important, because ill-conceived strategies can have a detrimental impact almost as much as no speed. So while we would hope for a good amount of progress over the next couple of years regarding all of what I've spoken about, I mean, we have ministers that are focused on all these things, and we expect to see some traction. I mean, this government has been in office for basically about 4 years and has done a lot of work when it comes to crafting policies that are supposed to drive us to the next phase. So we would hope that right now, what we will see more of is significant moves towards towards implementation.
Okay, as we speak, the PEBEC 4.0, which is the Presidential Enabling Business Council, they're already on a roadshow, already in Kano as we speak. And of course, this will go on until for a couple of days or a week or so down the line. And they're talking about the version 4 of the ease of doing business. So, Dr. Jolomi Odonghanro is currently on the road with our team. She's the head of that secretariat under the Office of the Vice President. So they're hitting the ground running just days or week or 2 weeks after President Buhari's re-election. So you think this is good, but what more do you think we need to do in the ease of doing business and beyond the ease of doing business?
Yes, I mean, like you mentioned, ease of doing business is in the 4th phase now at PEBEC 4.0, if you use that acronym. And they've made some gains when it comes to reforms, and right now they're in the phase of trying to institutionalize those gains. But I mean, it's one phase of what needs to be done. That project, or what has those gains, once institutionalized, should start to spread, but with deliberate action to do so. I mean, if you focused on, for instance, one of the reforms that were brought in was about ports and having cargoes being able to move from ports, move in and out of ports more quickly. But then you have issues on a state level where we have the proper gridlock, which causes the cost of moving goods inland from the ports into the country, which makes it quite expensive. So this is one phase of it. Like I said, a framework has been built upon which there needs to be deliberate action at a smaller level, at a more micro level, to push the reforms. This is not the start of it. I mean, the first discussion we had today was about barriers to trade, reducing competitiveness and investment. All of these things are deliberate. They need to be deliberate policy actions that need to be institutionalized over the next 4 years. I mean, this administration has the latitude of this being the last election cycle, so this administration has 4 years of just work, and so all of the things that have been done and all the things that would need to be brought on board, because we've spoken about some of them today, our views on what we really need to drive economic growth. Those things need to be put into deliberate policy actions that need to be driven by different MDAs to get us on the path of growth. We are not going to accelerate to 7% growth over the next 2 to 3 years or 4 years, but it will set us on a path that leads to that down the line.
Okay, let's spend about 2 minutes to talk about the monetary policy side of things. Of course, you are in charge of the team lead at Afrinvest when it comes to fixed income. So what's your outlook here from the next monetary policy committee meeting? Effectively, we're counting down to the end of the first quarter of 2019. There is no time. We have to hit the ground running.
Yeah. The monetary policy standpoint has been up until now. I mean, the policy rate has been 14% for a couple of years now, and the policy action has always been centered around price stability. So right now, there's nothing that has materially changed that should change that policy standpoint. So I would be surprised to see the CRR change from a 14%, because as we've seen over the last years, the CBN has utilized different policy actions to affect interest rates downward, so it's still possible to achieve a certain level of growth, we believe that interest rates are too high. So what we expect to see is that you see more of that policy, this utilization of those policy levers to move interest rates in line with obviously internal and external factors affecting the market. The CBN will focus on inflation, exchange rate, and also looking at other factors for instance, in systemic important central banks. Are they still increasing rates? What does that do to the rate differential between Nigeria and those countries? And how would that affect capital flows? Because again, capital flows are very important in managing the level of prices. So the focus is not going to materially change for now. And given that, we will still expect at the next MPC that you'll still see the CBN hold the policy rate at 14%, even though it seems now that in the US and the UK there might be a stall on the aggressive hikes we've been seeing in recent times. But you still have risk on the horizon here. So we expect policy rate to remain at the same level, and the CRR at the same level. There's already been a DCRR which banks are going to seek to utilize this year. So I mean, I wouldn't expect a change there, and the corridors to stay the same.
Okay, great. Thank you so much for your time today, Jolomi Odonghanro from Afrinvest, associate and team lead for fixed income. Thank you so much for your time live to us from our studios at the Nigerian Stock Exchange. We'll go back to the Market Street, or we'll stick with the Market Street when we come back. Earnings is making the headlines already. We'll track a bit of that for you in the next few minutes. Stick around.